I've said before in live streams that the AMC Moass narrative, the GameStop Moass narrative, the elements debunk themselves if you know a little bit of basic background information. So let's go through an example that came up today. So we're looking at stock market circuit breakers or trading halts, as they're commonly known. Now, there are two main types of circuit breakers or trading halts. So we have the market-wide circuit breakers, and this applies to the overall market, or in other words, the S&P 500. If the S&P 500 falls below a certain percent or rises above a certain percent, the circuit breaker is tripped. There is a pause in trading and it resumes at some later time. That's the first type. Second type of circuit breaker is the limit up, limit down circuit breaker or the single stock circuit breaker. This is what is relevant today. The limit up, limit down circuit breaker is a volatility moderator designed to prevent large, sudden price moves in a stock. So, how does it accomplish this? Basically, restricts trading to within price bands specified amount above and below the reference price. And the reference price, average price over the last 5 minutes. So, I'm reading here if the stock's price moves to the price band and does not move back within the price bands within 15 seconds, trading in the stock will pause for 5 minutes. So, the price bands are 5%, 10%, 20%, or so these price bands vary from being 5%, 10%, 20%, or the lesser of 15 cents or 75%, depending on the price of the stock and whether the stock is a tier one or tier two NMS stock. So tier one stocks include all the securities in the S&P 500 and the Russell 1000 and certain exchange traded products. But in this instance, what's relevant is the Russell 1000 because this index includes both GameStop and AMC. Both are in the Russell 1000. So we're dealing with tier one stocks here. So let's find out what circuit breaker is in effect for GameStop. So from Investopedia, for stocks included in the S&P 500 or the Russell 1000 indexes and certain exchange traded products, a trading pause starts once the price moves up or down at least 5% from the average price in the preceding 5 minute period for securities priced above $3. Well, that applies to GameStop as well. So we're on the iShares Russell 1000 ETF IWB page, looking at the holdings to verify that indeed AMC as well as GameStop are both included in the Russell 1000. So this 5% price band for a 5 minute pause of trading is applicable to GameStop. So, with all that in mind, here's Donnahue George talking about the illegal halts on GameStop today.
Listen, what we saw today with GME was criminal activity in real time, part of the crime of the century in real time, and the SEC stayed silent, the DTCC stayed silent, the CFTC stayed silent, and of course, FINRA stayed silent. Now, here's the thing that trading halt we saw at when GME was about to explode, when GME hit 32.88 and they shut it down and pushed it back down under 30. Here's the thing. The SEC states that the reason they have halts is to allow a company to announce important news or where there is significant order imbalance between buyers and sellers of a security. That is what the SEC says. You know what the SEC failed to put? We also authorize halts when our criminal buddies need to maintain their position and are afraid to lose money.
When our criminal buddies need to halt the stock to stop the momentum from going up, to save them from losing billions and billions of dollars, that's when we authorize halts also.
Well, that may be true. People might be not losing a ton of money because of the halt, but that's not the reason the halt happened. So clearly, we do have circuit breakers. We have it on the overall market or the index, as well as on individual stocks. Because AMC and GameStop are both tier one securities, meaning they're in either the S&P 500 or the Russell 1000. That means if the price of the stock changes in excess of 5% within a 5 minute period, the stock pauses, is not traded for 5 minutes, and then it resumes. That's the regulation. That is reality. Limit up, limit down itself has a website. It started on May 31st, 2012, okay, to address extraordinary market volatility. The plan was approved as a permanent rule on April 11th, 2019. The plan is administered by the operating committee. All these exchanges participate. Okay. So this is the reason, not some favor that someone is doing for someone else or something like that. I mean, this is accomplished by a computer that measures the price change from an average reference price to see if it goes beyond these bands of 5% or 10 or 20. But in our case here with GameStop, it's 5% up or down. And if it goes up 5% or more, the stock halts trading for 5 minutes. Let's look at the chart. So here's GameStop today. So the stock halted at 9:35. So at 9:35, and it's actually 40 seconds, I believe, price hit the band, 5% band, and trading was halted for 5 minutes because we can see the next candle is 9:40. I'm on 1 minute candles here. So 9:30, 1, 2, 3, 4, 5, 9:40 continues trading, 9:44, 9:45, 9:50. So here's the second halt and also indicated the 5%. So what we have here is an approximate reference price of 31.29. Now, what is the reference price? So this reference price is the average price or arithmetic mean price of the eligible reported transactions over the prior 5 minute period. So all the transactions averaged, that price stands as the reference price until 30 seconds later, the new reference price is calculated if the new reference price, which is again the average price of the transactions, would be 1% away from the current reference price. So if it was 0.75% higher, for example, the reference price would not change. Even though the average has gone up, the average has not gone up by 1%. So the reference price stays the same. In the case of GameStop today, we had a halt at 9:35 and 40 seconds. That was 5% higher than some reference price. So approximately 31.29. Now we'd have to actually go to the time in sales and look at all the transactions and do the average. We're not going to do that. We're just going to look and see, yeah, 5% lower than the price at which it was halted would be 31.29. In any case, we can see the price went up by 5% in this period, and that triggered a halt. That triggered a halt. So now up here, when trading resumes, so then we have a new reference price here. It actually comes damn close here to potentially being halted again, but it did not halt here, presumably because the reference price went higher in this area, but it did not trigger a halt. So you'd think that if what Donnahue George is saying here is true, that potentially you would have seen another halt here, because the assumption is that this would have continued on up, but that didn't happen. So we got the sell off, and surprisingly enough, you have another trading halt. At 9:45, the price has become 5% higher, or in this case, lower than some reference price, which we can approximate as 33.65 relatively is an average of all the transactions that occurred in the previous 5 minute period. So here we have a halt on the downside. Now that we can see these numbers, these levels, these bands on the chart, we can go back to this speculation and let him finish what he's saying. But I mean, the reality is he's wrong.
Halts aren't just authorized when there's an imbalance between buyer and seller, or when there has to be important news to be released by a company. They do halts to legally manipulate the market in order to preserve the wealth of the 1%. It's absolutely outrageous what happened today with GME. And
You know what's
everybody saw it.
absolutely
Everybody
outrageous?
saw what was happening. And the SEC sat on the sidelines and
The
stayed
thing
quiet.
is that
And you know
people who
why?
have
Because the
wealth,
SEC is
people
just
who
as
have money,
culpable as the
generally
bad actors
speaking,
that rob retail investors,
they have
pension
educated
funds
themselves
every
on
day.
the relevant
There was
aspects
no legal
of their
reason
money, how they
for the
acquire their
GME
money.
halt at 32.88.
In other
The
words, the
only
stock
reason
market.
they halted GME
They've
at
educated
32.88
themselves. They have
because they
experience.
know it was on its
They've
way to
humbled
Moass.
themselves.
and they
in their losses.
wanted to save the 1% from
They've taken
losing
their
billions and
losses
billions of dollars. Anyway,
instead of speculating about some off-the-wall conspiracy theory,
at $32.80.
calling everything
You
illegal,
have a
calling
great day.
everything
God bless, and
crime.
I appreciate y'all on
It
this
just,
journey with me.
it's not conducive to building wealth in the stock market. It's just not. And so you have all these clowns, these AMC grifters, every day putting out these videos full of misinformation. And we come back around to this shit debunks itself if you have a base of knowledge that you can pull from in evaluating what these so-called influencers are putting out. And it's never been more important for people to have that base level of knowledge because there is so much noise, there is so much misinformation and outright fraud every day here on YouTube and Twitter and social media in general about finance and specifically about this AMC Moass, GameStop Moass fantasy that is not grounded in reality. It debunks itself. The only thing holding this narrative together at this point is ignorance.
You full of shit, full of shit, full of shit.